Let's get to Steve Leisman with those headlines. Steve?
Yeah, good afternoon, Kelly. Fed San Francisco President Mary Daly saying the economy is closer to a point where the benign outcome could be less likely. So she's the second person today, second Fed official to worry about possible weakness in the economy. She goes on to say inflation is not the only risk we face. And then she offers two different scenarios, which are not perhaps surprising to our viewers. She says the Fed can stay higher for longer if inflation falls more slowly than expected, but lower rates would be necessary if inflation falls more rapidly or the labor market softens more than expected, very much using a construction used by the Fed chair, Jay Powell. She goes on to say the Fed is still fighting to bring inflation to 2%. So here's the normal talk about still fighting inflation, saying we've made progress on inflation, still more work to do. Goes on to say the rise in unemployment so far has been modest when you look at the decline in inflation, and she's not yet confident enough to cut rates because of the bumpiness of the recent inflation data. And she says it's hard to know if we're on track for price stability. One other thing which is interesting, she says restrained demand is now needed to get inflation down. So, Tyler, another Fed official who's the idea of working in this idea that there is some weakness they're concerned about, but not yet definitively offering new guidance about how monetary policy would respond to that change in the outlook.
Interesting that last point you made there. Restrained demand is going to be a key part of getting inflation under control. That sounds like we've got to have a slower economy with higher unemployment.
You know, I put that in there, Tyler, because it was a little bit perplexing to me in the sense that she's at the top of the remarks we noted she's concerned about a weakening economy. At the end there, we talked about how she's saying, well, look, we need a weaker economy to get inflation down. So I'm not exactly sure what maybe the reaction function is of the Fed here to weakness. Would they cut rates or would they welcome a slower economy?
Yeah, exactly. Steve, thanks. Steve Leisman.